If you feel you own too many dividend stocks and you want to do some consolidating, you've landed on the perfect video. A matter of fact, we have another dude, 9456, to thank for this very video after he left a comment on a recent video of mine saying that he's trying his best to really reduce how many holdings he has and he's really struggling with it. And because I also too struggled with this whole consolidation process, I figured I'd actually make a video about this whole thing and give you some words of wisdom. Now, by no means do I think I'm a Mr. Know-It-All when it comes to consolidation, but I will share with you what I did, and I'm going to share it all transparently, so hopefully it will help you out. With that, before you make any immediate moves and pull the trigger on selling off of your holdings, I would highly advise you to first stop dead in your tracks as an investor and revisit the investing strategy board for yourself. Now, oftentimes, whether it be in investing or in life, we think we have a brilliant idea and we immediately begin to execute on it. The only problem with this approach is that there's no real plan or strategy behind the initial chess move, so we're then left with a half-baked plan that likely won't get us to where we ultimately want to go. Now, true story, just as many of you may or may not know, after overloading my personal portfolio with over 40 holdings back in 2020, I heard Bill Ackman share in an interview that you should really focus on just 7 to 10 holdings in a portfolio. I thought to myself, yes, less is really more. And then I asked myself an important question, which was, what's my actual goal? And more importantly, which stocks are most likely to get me to that goal? Now, of course, there were stocks that I loved, particularly the dividend stocks with those hefty dividend yields. But being realistic with myself and based on my personal goal, I had to come to terms with the fact that I needed to focus more on dividend growth and total return. So that is just step one. Pause and revisit your financial goals or create them if you never actually did this step in the first place. Now, the next step is where we actually get a little busier. We won't be hitting the sell button just yet, but step 2 comes down to aligning your investor profile with your actual investments. So in knowing your goal and your investor profile, you can now literally list your investments and then sort them by the keepers and the sells. For example, I'm 30 years old with decades of time to go before I retire, and that means I have a lot of time to invest in the market. Therefore, I'm not looking for high yield dividend stocks and hyper focused then on dividend growth and, as I said, total return. So when I looked at my stocks in my portfolio, a recent example was Johnson & Johnson. That was a stock that I absolutely loved. I really had to understand the fact that it's paying over a 3% dividend yield. And as you can see here in the chart, it wasn't the biggest growth player in my portfolio compared to, say, Visa, which is now there in yellow, with a much lower dividend yield, yet it's appreciating like crazy, delivering through on total return. This second step will give you a ton of clarity. If you're reviewing your stocks and find that they don't align with your investor profile or your goals, don't make this emotional. You're not married to them. Investments are meant to serve you, not the other way around. So prepare yourself to actually boot these holdings from your portfolio. Now, this process is not exactly a 1 day or 1 week deal. Well, it can be, but I wouldn't recommend it because you want to think about taxes. So step 3 is coming down to reviewing how you're going to be hit by Uncle Sam. Are your holdings in a tax advantage account, or will you be taxed on capital gains, short-term or long-term? Or perhaps you're actually down on certain investments and you can sell the holdings to ultimately capitalize on writing it off as a capital loss, which as of this video, you get to do that up to $3,000. Now, I won't hide from you all, back when I started trimming my portfolio, I actually found quite a few losers in my portfolio that I had to trim out, and I did in fact take the capital loss. Therefore, I took some time because I never wanted to sell off the holdings unless I was actually going to be in the window of the 3K limit. So learn how to play the game of taxes and be smart, because a lot of investors, at least from what I see, are buying and selling like there's no tomorrow, and come tax day, well, they're presently surprised to discover just how hard Uncle Sam can hit, and he always comes collecting even if it's on losses. Moving right along to step 4, target and immediately boot out the companies that you either don't understand or that you don't get excited by. The whole point to being an active investor is enjoying the process. Knowing what you're invested in and following the businesses as if you actually own them is important. The reality is when you buy a stock, we're actually buying a piece of the business. So in reality, we should really act like we're the CEOs, or at least on the executive board, getting as active as we possibly can be with the business. Now, if you don't understand what the businesses that you own do or have no interest in understanding them, this is where I would just want to shoot you straight and maybe say that you should just target ETFs and be a little bit more passive of an investor. A matter of fact, you might even beat most of us stock pickers with simply investing right into the S&P 500. Now, let's say you do understand a business, but it doesn't necessarily excite you. then perhaps it may be a reason to boot it, because again, you want to be all in on what you own and you want to be able to do research on the company and follow it. And if it doesn't excite you, I can just tell you this is going to be quite a challenge for you. The question I usually ask myself personally is, would I want to be the CEO of this company if by some divine miracle I was randomly called up to take over as the CEO? Or if not the CEO, could I at least work alongside the executive team and really help rally the troops of that company? Before, when I had 40 plus holdings, my answer to that question for most of those holdings was no. But today, every holding in my portfolio, I would absolutely be more than happy to actually sit at that round table with those executives to make decisions and change the world. Now, this leads me to the final step, step 5, which requires you to just hit sell. This is after you configured or revisited that strategy of yours, know your investor profile, check the tax implications, and prepared yourself to actually make an exit from the company by saying, no, you don't want to be at that executive table. The way I personally went about trimming my portfolio down on this step was slow, and I actually regret the speed at which I did this whole process, but I gotta be honest with you, it was my journey and my experience and doing it on my own. So here I am to tell you, you can move a little bit quicker, but I will say this: target stocks that you maybe have 1 or 2 shares of first. Don't think twice about them. These will be your easiest stocks to kick out because they really hold no actual weight in your portfolio. From there, when and if you get to a heavier weighted position, you may want to do some timing on your exit to at least the best that you can, but don't get caught up on it. Again, a sell is a sell. For example, Johnson & Johnson was a recent massive sell of mine, and it took me a few months to actually carry out the sell because it was over $16,000 worth of Johnson & Johnson, and a lot of back and forth and thinking, but ultimately I did it, and it was like a tooth that needed to be pulled. And I'm going to admit this to you all. I also missed a giant opportunity to really get invested in an alternative investment that would have been much better of an opportunity and made me a lot more money if I pulled that trigger sooner. Now, investors, I hope this video helped. Let me know down there in the comments if it did, but would also love to catch your thoughts and your experiences with downsizing or consolidating down in the comments, so let me know. Tune in right here for the one question I think every dividend investor should be asking themselves as a dividend investor. And of course, don't forget to subscribe before you actually take off. With that, I will catch you all in the next one.